Chinese industry body urges U.S. to rectify mistake over chip ban. As global firms face chaos, disruptive, discriminatory move put millions of jobs at stake. From laying off workers to expecting hundreds of millions of dollars in losses, global chip makers, including those in the U.S., are starting to bear the brunt of the chaos caused by what has been described as the harshest U.S. ban on chip technology to China. As companies, media reports and analysts continue to warn of serious consequences, China's main chip industry association on Thursday called on the U.S. government to rectify the wrong move that puts the global chip industry and other related sectors at risk. Last week, the U.S. government announced a broad set of technology export controls, including a ban on shipments to China of certain semiconductors made anywhere in the world with U.S. equipment. Following the move, chip companies around the world have been grappling with the chaotic changes as well as losses. The Philadelphia Semiconductor Index, a widely tracked gauge of the sector, has lost more than 9% since the new measures were introduced last week. Intel, one of the leading U.S. chip companies, is reportedly planning its biggest round of layoffs since 2016, with thousands of workers set to be let go by the end of the month, and some divisions losing up to 20% of their staff. Analysts said that the disruptive and discriminatory move could put millions of jobs at stake. Chip-making technology supplier Applied Materials Inc. said on Wednesday that export restrictions to China would result in a $550 million loss in net sales in the quarter ending October 30, with a similar impact expected in the following 3 months. China accounted for 29% of Applied Materials' total sales in 2021, Reuters reported on Wednesday, citing analyst estimates. The impact on sales for KLA Corp, Lam Research Corp, and Applied Materials will be in the range of 5–10%, not calculating possible retaliatory measures from China. ASML, Europe's largest supplier of equipment to semiconductor manufacturers, has told its U.S. employees to stop working with customers in China. The China Semiconductor Industry Association, CSIA, said on Thursday that it opposes the U.S. arbitrary chip technology ban against China, while urging the U.S. to rectify its wrongdoings in a timely manner, in light of the interests of the global semiconductor industry and its downstream customers, as well as the well-being of millions of workers in the industry. Chinese analysts said that if the new measures are strictly implemented, global progress and cooperation will suffer, and U.S. companies' research and development R&D capacity will be undermined, as some companies could lose up to 30% of total revenue. China accounts for 1/3 of their total revenue. The U.S. move shows that Washington is adamant about sacrificing U.S. semiconductor companies on the altar of its heated technology crackdown on China. Chinese analysts said one of the direct effects of the U.S. ban will be lower investment in the global semiconductor sector, as shown in the recent stock rout. The recent U.S. chip share rout is both a result of a perceived supply glut as well as a vote of no confidence in the new U.S. ban. Losing the Chinese high-end market means less revenue and even less R&D expenditure and slower innovation. Fewer shipments will mean higher product costs to be paid by consumers. U.S. companies' reputations will be tarnished, and from this day on, clients of their products will have second thoughts when making purchases, predicting global diversification and segmentation for a costly industry that bases its chance of success on global cooperation, according to a report by IC Insights, which analyzed semiconductor R&D spending by headquarters locations from 2011 to 2021. The Americas remain the largest origin of this investment, accounting for 55.8% of the global total in 2021, slightly up from its 2011 percentage. The share of the Asia-Pacific excluding Japan saw the biggest increase, reaching 29.5% in 2021 from 18% in 2011, at the expense of shrinking shares by Europe and Japan. Key players from South Korea, including Samsung Electronics and SK Hynix, reportedly managed to secure a 1-year waiver on chip gear in China, reflecting the difficulties faced by the U.S. ban.